Governor Whiteside, I want to start with you. What has worked and what hasn't worked in Fiji when you try to reach agricultural SMEs?
Thank you, Michael. Maybe if I could just start off by putting some things in perspective here. We're a very small nation. We don't have the issues that we saw from the last session. We don't have 7,000 islands to deal with. We don't have 700 microfinance institutions. In fact, we have one microfinance institution, which is working quite well. We have a population of less than 900,000, a GDP per capita of around 4,000 US dollars. We have 5 international banks and 3 credit institutions, 2 of which are local, and 11 insurance companies. So that sort of sets the scene. We are small, and it is quite overwhelming to hear some of the things that are happening here, but being able to share is a great experience for us. Now, I just wanted to talk about the SME sector in Fiji because, unfortunately, we don't directly look at SME in agriculture. We try to improve all SME finance in Fiji. We've tried to improve access to all SME finance. That is our number one target. If it happens that SMEs in agriculture get the benefit of some financing through the formal system, then that's great. So, just in terms of our SME sector, it accounts for about 12% of GDP. And agriculture is a very small portion of that. This is in terms of commercial bank lending to the SME sector. It's around 10% of total private sector lending, and agriculture accounts for just 3% of that. So that sort of sets the scene. We have a development bank that actually lends to agriculture as well, but small, only upwards of around 50, 60 million Fijian dollars. Now, trying to get back to the question and trying to answer that is what I've tried to do is turn it around in terms of answering the question, looking at the challenges that we're facing in the agricultural sector and in SMEs in general, right? They generally have no fixed collateral. Most of the land in Fiji is leasehold land, so they don't have any security on that, or not given any security on that. They are movable assets, of course, are not counted. They often have poor accounting procedures. They lack sound business knowledge. They have poor financial systems in place. So that sort of sets the scene. Agricultural SMEs are in a worse position. They have seasonality of output. They have poor infrastructure. We're looking at that. Poor bank representation in rural areas. And they also have exposure to national disasters. So these are the issues we look at when we try to set the scene in terms of putting things in place. The Reserve Bank of Fiji has 2 hats, and we hear that one is our prudential hat. International banks are quite happy with lending in the urban areas. They have good customers, they get good interest rates. They don't want to, looking at all the risks which I've just put out, they don't want to get into this area. They don't need to, unless we, government, the Reserve, the central bank, try to put in place some sort of innovations. And maybe we'll come to that later on. But we also have a second role to play, and that's, as the governor from Bangladesh has said, we have a development role. So this is where we are coming in terms of setting up innovations and that. Yeah. Thanks.
But you do have farmers, as you mentioned, and you do import much of your food. Why would there not be a greater emphasis on this sector, given that factor, or am I missing something?
No, I mean, 17% of our imports are for food because we have a big tourism industry and it needs to be catered to. These are smallholder farmers, and it's just that they haven't been targeted. There are some specialist farmers that are coming on board now that are profitable to the commercial banks. These are the high-end farmers in hydroponics and things like that. But the normal farmer with a small holding in the rural area, they don't get that assistance.
They're just not targeting.
Yeah.
Mm-hmm. Let's move to Bhutan. We have Deputy Governor Eden with us. Thank you very much for being here. Tell us a little bit about your unique challenges, because I know, of course, Bhutan has an interesting landscape that obviously dictates much of what you're able to do there on the agricultural front. What can you tell us about what's worked and what hasn't worked in Bhutan?
Thank you. Thank you for the question. Before I get into the details of the subject, I would like to wish everyone here from the land of happiness. I like to start by saying that agriculture, financial finance for agriculture, and more specifically agriculture SMEs in Bhutan has been driven from the poverty alleviation side. So what I would like to mention is that we don't have as many as 7,000 islands, but we are a small country with a very difficult topography. We have a lot of mountains and a lot of infrastructure. There's a lack of infrastructure. I would like to mention that Bhutan in the past many years have achieved a very high growth rate as far as GDP is concerned. We have on an average 8% GDP, and we have also been in a position to realize many of the Millennium Development Goals, but we still remain a poor country. So we had some surveys done, and as per the Poverty Analysis Survey of 2012, the poverty rate in Bhutan, although decreased from 24%, is still at 12%. And getting more detail into the analysis, we have found out that poverty in Bhutan is very much a rural phenomena with growing levels of income disparity between the rural and the urban areas. As I had already mentioned that the main problems or impediments are mainly because of the very difficult mountain terrain, weak transportation infrastructure, low population density. We have only around 700,000 people living in Bhutan, and very limited access to finance. I would also like to stress the point that although we are basically an agriculture dependent country, so majority of our population, around 63% of our population depends on agriculture, but only 3% of the total land area is cultivable. So that is also another impediment. And in terms of the overall GDP, the share of agriculture has been diminishing over the past many years, and which currently stands at 16%. So this is an issue of concern for the government as a whole. Therefore, the royal government of Bhutan has been, over the last many years, through the 5-year plans, have stressed on poverty alleviation in terms of developing infrastructure, but mostly physical infrastructure in terms of road, telecommunication, and all those. But then from the central bank side, from the Royal Monetary Authority side, we have been also actively involved in terms of coming up with complementary efforts in increasing access to financial services. Because of the fact that a survey was done in 2012, which showed that 30% of the urban households in Bhutan had access to financial services, while it was only 18% in case of rural household. Also, there was a World Bank survey which was done in 2006, and the main result was that access to finance was the main impediment as far as SME growth was concerned in Bhutan. So this, with all these indicators, it is very clear that financing for agriculture SMEs in Bhutan is very, very important. So as a result, the government has given high priority and has come up with a government vision document 2020, which says that as being a country with the gross national happiness as our main philosophy of development, it is important that we ensure the development of the country is inclusive and balanced. So as far as the challenges is concerned, I would like to mention that we have a number of branches, actually around 285 branches, which includes ATMs and bank branches, regional offices. But when we look at the financial penetration in terms of branches per 1,000 kilometer, it's only 2.89, which is one of the lowest in the SAARC region. So, therefore, even when we look at the financial literacy, it is much higher in urban areas, which are around 71% vis-a-vis 40% in the rural areas. Therefore, what we did, we at the central bank, we looked into the different challenges. What are the problems that's facing Bhutan? We have a good growth, one of the happiest country, but then why is there no balanced growth? So what we found out was that the most key challenge, I would say, is lack of proper coordination between different stakeholders in facilitating access to finance to agriculture, which has resulted in isolated policies with very limited results. So this is one of the most important findings that we have come out with. And we also found out that although the regulatory and the legal framework in general for the SME is very much there, but as far as specific agriculture finance is concerned, it is not very strong. We also found that there is a lack of comprehensive data on the status of access to finance, both from the demand side and also from the supply side, without which it was very difficult for the central bank to make an evidence-based policy making. So it was virtually impossible. Also, we found out, as has been already mentioned and was voted as the #1 in the second question, that in Bhutan, majority of the financial institutions, they provided credit irrespective of whether you are from the rural area or from the urban area. The lending was always provided you had collateral like land or so. That part was also very, very important for us. And of course, the very low density of population. We have one of the lowest density of population in the world. And again, coupled with many other challenges like low levels of financial literacy, lack of insurance, agriculture insurance products, absence of VCF, marketing, storage facilities, and very high level of rural-urban migration. And last but not the least, one very important factor being that Bhutan is situated between China and India, so that we had a very, our local products actually were not very competitive with the products coming from India or China. So with that, I would like to sum up the challenges that we face in Bhutan. Thank you.
Thank you. That's actually very interesting, and I think that the vast majority of those challenges are challenges faced by just about every country in this room. But let me then ask the obvious question, which is, what are you going to do to meet those challenges? Do you have now a strategy, or how are you going to go about developing a strategy to address those?
So I would like to mention about the financial inclusion policy that the Central Bank of Bhutan has spearheaded after knowing all the challenges that we had. Like I had said earlier, that we found that it is very important to have a very holistic financial inclusion policy for the country as a whole, because our philosophy is happiness, but this happiness has to be translated into practical happiness. When every farmer, we might not achieve 100%, but at least every person in Bhutan, at least one in every household should be happy. And what is happiness? Happiness is nothing but when you are very comfortable. And how do you feel comfortable? When your financial well-being is very comfortable. So in that respect, we at the Central Bank, we took a lead role in framing the financial inclusion policy for Bhutan. And while doing that, as I mentioned earlier, although we had a regulatory and supervisory framework for the SME overall, but we focused more on the kind of innovations through the regulations in terms of how to reach to the poor. So in that area, we went more into the technology-based kind of regulation in terms of enabling anybody who wants to start cheap, efficient services to reach the poor in terms of mobile banking, agent banking. And we not only looked at that, as I mentioned earlier, we have also placed a great importance in terms of creating infrastructure. Like I said earlier, irrespective of whether we license as many microfinance institutions or possible, if we don't have the kind of infrastructure that will facilitate, we thought it will not be possible. So therefore, the central bank over the past 3 years, we are very privileged actually to say that we have established the Credit Information Bureau as well as the Central Registry, which will, I hope, facilitate SME finance, particularly relating to the agriculture sector.
Thank you. Keeping with that happiness theme, let me just jump over to Juan. Juan, you're in the business of making farmers in Malaysia happy. How have you done that?
Thanks, Michael, and it's a pleasure to be here this morning to share some insights and experiences that we, the Agriculture Bank of Malaysia, which has actually been established for well over 40 years. Just a brief background. I wouldn't want to dwell too much about how we came about, but basically we are established through an Act of Parliament back in 1970, at the time when the government of Malaysia took out a World Bank loan to finance the development of the paddy areas, because we are basically rice is our main staple diet. So back in 1970, we felt the need to basically grow our own food. So part of the requirement of that loan was that they had to establish an agriculture bank. So henceforth, we came to being, and we've been doing this business for 43 years. We are a development financial institution, one of 6 in the country, and we are mandated to lend to the agriculture sector. Basically, we have we are quite different in the sense of other development financial institutions, because we not only act as the channel for government allocation towards the agriculture sector, but we also undertake banking business. We take our own deposits and we do lending as well. Traditionally, we've been lending into the primary agriculture area, which is basically oil palm, rubber, commodities. But latterly, in the last 10 years, under the agro-food policy, Malaysia agro-food policy, we are required to focus more into the midstream to downstream and into food production. Why food production? Because you're talking about food security, you're talking about self-sufficiency levels. And as you know now, I think there's an increasing demand for food for self-sustainability, and this leads to political stability and whatnot. So I think from a practitioner standpoint, I mean, it's interesting to hear the policymakers. I'm basically on the other end of the spectrum. We've worked very well with the governments. We are part of the Ministry of Agriculture. We are owned by the Ministry of Finance, but we are all agriculture. All our policies are driven by the Ministry of Agriculture. So we have very clear objectives about how we go about to support the agriculture sector and the agriculture community. Malaysia is an agriculture country, although if you look at the GDP composition now, 55% is in the services area. So GDP for agriculture has dropped, but still, because a lot of the rural communities out there, basically their livelihood depends on agriculture. So we are there. 70% of our branches, we've got 189 branches, 70% of them are actually out in the rural community. So when you talk about financial inclusion agenda, we have been doing this for the last 40 years. It's not today that we started doing this. We've been there from day one. So we have various means and methods of how we reach out to our constituents. Branches is one. We have financial terminals. We actually have a machine which goes, our people actually go out to the markets to collect deposits and pay bills. We've been doing this for the last 10 years. We've got this handheld. Of course, now you've got the new technology coming on board. We are taking on the things like agent banking and mobile banking as well. And we've just launched our internet banking. We're a bit behind the game, but our plan is come maybe in the next 2-3 years, we will be actually able to be fully into the financial inclusion agenda. So I think, hopefully I'm not deviating from the question, but I think basically we are here to serve the agriculture sector. In meeting our mandated role, basically we have actually grown our loan or financing base at the rate of 10.2% annually for the last, since 1980 actually, and that is double the rate at which agriculture growth for the last, since 1980 has only been 2.4%. So we grew at 10%, which means we are actually developing the agriculture and deepening the sector. Our financing base, in terms of number of accounts, we have about well over 200,000 accounts, loan accounts. We have well over 2 million depositors with us in terms of number of accounts. And these are things that we do well. What can we do better? Basically, we can continue to provide more access to the rural community in terms of banking services. We want to become a one-stop center because we find a lot of agriculture entrepreneurs, their financial literacy is very low because they're from the rural community. We want to basically create a situation whereby they can come and get a one-stop solution, not only in terms of the financing, but we want to teach them how to become a responsible borrower. I think that's very important. So there's various programs we have, entrepreneurship programs, which we go and reach out to our existing and new borrowers. We have actually launched a program just to share with the audience, a program where we tie up with all the higher institutions of learning in this country. It's called a My Agro CIS. CIS is actually Siswaza. Siswaza means undergraduates. In each of these universities, they actually create clubs, agriculture clubs, for those that are interested to go into agriculture, and the university actually sets a plot of land for them to get involved in agriculture. If they are interested upon graduation, and need not be agriculture graduates, they can be accountancy graduates, engineering graduates, we will give them a membership after they graduate, and if they want to go into agriculture full-time, then we have a track record of their activities in the club. We actually provide them financing, micro. So AgroBank, we actually do micro, SME, and corporates, but 60-70% of our lending actually is in the micro and the small SMEs. So I hope that gives you
No, it's very helpful, but I want to go back to some of the discussion we had around the questions in the beginning of the session. And those who said, look, sometimes the state's intervention is counterproductive. And here you are as a representative of a state development bank in agro. How do you respond to those criticisms that say, you're the problem, you're distorting the market, we don't have viable, commercially viable solutions because states intervene? And here's a terrific example. Have you crowded out the private sector? How would you respond to that?
Okay. In actual fact, this is my own experience after being on the helm for about 2.5 years. Commercial banks tend to shy away from agricultural projects because inherent risk is high. Weather, disease, and especially in our situation in Malaysia, we are no different. We are subject to a lot of vagaries of weather and whatnot. But commercial banks tend to shy away from they only want to do large ticket loans anyway. So we come in at the very low end. The guy who wants to basically start up, he's got some land inherited from his father or grandfather, he wants to cultivate some vegetable or fruits. So we come in, even oil palm plantations, basically. Commercial banks only want to do the large plantations. So we do it under 140 acres, we'll do it. Commercial banks don't want to touch it because to them,
but you came in 1970, right?
Yeah.
Okay, so maybe some point over the last 40 years, maybe something's changed in the market? Has there been an evaluation?
Good point. In fact, now with the commodity prices being what they are, now the commercial bank, we are actually competing with the commercial banks now because they're taking away our business. We have actually cultivated these small holders from small. Over time, they've acquired more and more land. They've become very big, and suddenly out of the blue, the commercial banks come in and take away them. But it's okay because then we've achieved our role.
Exactly.
But I think your question about government's intervention and distortion of market, I disagree because I think it's complementary. You need to have an agriculture bank because there is a portion of the community which is unserved. Commercial banks don't want to go in. Because the risks are higher. Risk is high and it's even higher when the amount is small, whether it's fisheries, whether it's cultivation of fruit, you name it, even paddy. Paddy is one of the better performing ones. So I think we have been channeling government funding. That has been our traditional activities. So I see it as complementary. It doesn't distort the market.
Let me just push a little bit on this one before I bring Ernest into this. But the argument is, if there was a commercially viable means of serving this population, the private sector would have done it. So the government stepping in, by definition, has to be doing it on non-commercial terms in a way that will distort the market. True or false?
You're putting me on.
Shall we vote?
Yes, I would say so. Fundamentally, that has been the historic trend that we have seen.
So I'm saying there might be reasons for it, and you can justify it, and food
maybe
security.
It's factors beyond literacy,
sure.
they don't understand what is a you know, how to pay a loan. You know, they just think it's just money in, and don't have to pay it back. So that's where we step in and say, look, guys, you have to understand when you borrow, whether it's government fund or whether it's a bank-owned fund, but we have to teach them. You can't just say, you know, which is what we've been doing in the past. I'm not sure whether this happens in other parts of the world, but basically they say, oh, this is a government institution, government money, I don't pay it back. So we have to tell them, look, we can't just force the issue. We have to do it on a very structured and gradual basis. So that's why I have this agropreneur development program within the bank where I reach out and I will look at those successful cases and say, look, you want some more? You've demonstrated. I'll give you more, right? And for those, then we say, look, we take a stop, and then we'll say we have to train you up, you know. But it all starts from the beginning. That's why I talk about at the universities and schools. So far, so good. We've actually started to provide financing to them. So far, we've had good success.
Thank you. Ernest.
May I add something to that? I won't be so bold to say yes or no to your question, but I think it's a mistake that to say commercial bank. One of the mistakes that commercial banks have is that they look at agricultural financing and they don't look at profitable segments of that. They don't look at where they could bring their model or where they could maybe tweak their model and do the evaluation and embrace the opportunity. And what we are working with in Indonesia, at least, is helping banks to identify that there are opportunities that are profitable for them. Now, some of the banks that we're working with have tried to exactly take their successful urban model and put it into rural areas. That doesn't work. They need a strategy to get into it. They need to identify what the opportunities are and then begin to say, it's not agricultural lending, it's lending to this profitable segment, or it's excluding this unprofitable segment, or it's just too hard to get into to this. And in some cases, I reckon that there are banks that should never be in rural finance, should never be in agricultural finance, and I would caution against pushing them too hard into that. So maybe that does answer your question in one way or other. At the start, you asked the question, is the major problem the evaluation of the risk? And I don't think that that's the major problem. I think the major problem is a lack of an ability to identify the opportunity and then deal with the opportunity, and then put the risk management, put the strategy, put the agent network or whatever network one needs against that opportunity. That, to me, is the bigger problem.
But let's look at it from a financial inclusion perspective. We said earlier there's an estimated 500 million smallholders. Only a very small 7% of those so far are estimated to be reached by the value chain, the tight value chain finance. Then we've got maybe another 150 in that second category that are sort of loosely attached to value chains. The vast majority, the 300 million or so, aren't commercial at all. Now, when you talk about identifying those profitable opportunities, how far down are we really going? And how realistically, how far down can we go from a financial inclusion perspective?
I think one of the, again, this is me thinking, I think that one of the mistakes with agricultural finance is it's trying to solve the ills of the world. What people have identified is there's a productivity gap at a very low level with smallholders. Other things haven't worked, so what's going to work now? Let's get finance to these very poor subsistence farmers. Let's get agricultural finance to these farmers that potentially should never have had the loans or should not be in that range of loans. There's probably other things that would work for them. What we're trying to do is to incorporate some of the skills building. You're talking about financial awareness, and I don't know if we'll ever reach financial literacy, but we're trying to work with financial awareness by farm households. We're trying to work with good agricultural practices. We're trying to work with farmers to get them to see agriculture as a business at the same time that we're trying to bring in the agricultural financing side. But one of the challenges that we had was bringing in just the agricultural financing or just one other part of it.
I think you have a good point there, because I think if I can comment about from a policymaker's perspective, I think taking on the governor of Bangladesh in terms of policy, perhaps, because if policymakers can be aware that when you lend to the particular subsector which is deemed high risk, and you know that the impairment levels are going to be way above the industry, for example. So being aware about that inherently that when we lend, there's going to be that inherent pattern that you will have to stomach. So long and as long as the bank, like us, as a mandated bank, manages that portfolio in terms of recovery and collection, but being aware at the same time that it's going to be double or even triple the industry. I think that gives us more credibility for us to continue with whatever programs we have. Because if not, they will just pull back. Because the minute the impairment goes to a certain level, we'll just pull back. So you have this upswing, downswing, which is not good.
Okay. I'm going to go, Ernest, a final question for you. Let's say regulators from a country call you in and say, look, we really want to know what to do. We have all these various options. Should we, mandate sector lending? Should we develop a state bank? Should we do branchless banking? Or should we, and I'm touching some of the sacred cows here, should we not encourage these smallholders to remain smallholders because it's just not a viable livelihood, and we should actually invest some money in training them to get out and develop skills outside the agriculture sector because that's really where the future is. How would you advise that government and how to go about making that analysis at least?
Well, as Ernest Beth, not as my employer, but as Ernest Beth, I would reckon that I would say that there is, some farmers simply shouldn't be farming. They're farmers because they have to be, not by choice. I look at countries, Indonesia being one of them, where when I talk to successful farmers, the last thing they want their children to be is a successful farmer. They want their children to be in university. And the reason that they're a successful farmer, one of the reasons is so they can get them to university and get them off the farm. So I think it's not just an issue with the central banks, it's not just an issue with the Ministry of Agriculture, but it's a challenge that a number of countries have to deal with. And that is, how are you going to deal with, this labor drain off the farm? And I do not think you're going to deal with it by getting loans to every farmer in a country in order to do agriculture. I don't think that's the answer.
And so how would I go about deciding where to allocate my resources as a regulator? What should I be doing then?
I think some of the farmers, as a regulator, so you're talking about the central bank, so I think some of the systems that would be, some of the investment in the infrastructure, not necessarily the hard infrastructure, but the payment systems, making it easier for a farmer to get paid for what they're producing rather than looking at a loan as being the first thing that the farmer needs. Looking at how could you make it easier for value chain financing to work maybe as the farmer's coming up? How could you make it easier for a bank to get involved in rural financing and agricultural financing if that's in the bank's interest to be in that space? Because again, I don't think every bank needs to be there. Competition is what's needed, but there's a lot of banks that need to be able to say, not for us, we need to stay out.
Great. A few minutes, yep, Governor.
Maybe if I can, I mentioned the challenges earlier for us. I didn't mention some of the initiatives that we did actually put in place. And some of the initiatives are normal, others have put them in place, the agent banking. We have actually used the stick and put in place a credit ratio requiring banks to lend 4% of their deposits to agriculture. We've set up or required banks to set up microfinance units, and this came out of our National Financial Inclusion Task Force deliberations. Set up microfinance units in each of their branches, and this has brought about a lot of buy-in. Banks are actually coming into the spirit of this policy, and they're setting up their own little micro-entrepreneur fairs every month and things like that. So they're taking it forward. Some banks are targeting specific types of groups, like wheelbarrow boys at the markets and things like that. Finance them, provide them with a little bit of training, financial training, and get them to deposit and then finance their next wheelbarrow, so they start to build up a little business. So these are the types of things. The banks are coming in with the spirit of this microfinance units in their branches. One of the things that we've put in place recently, and that's with the assistance of the government, is a credit guarantee scheme for SMEs. Basically what it means is that the government has put up money which the Reserve Bank manages, and commercial banks, when they lend to SMEs, the government meets 50% or $50,000, whichever is the smaller, if any SME falls over. So that's the guarantee that is given. But to qualify for the guarantee, the bank must lend at no more than 10%. So again, it brings down the cost of funds to the SMEs. This is something that appears to be working. It is only put in place from 2012. We so far have in excess of 350 SMEs on board taking loans, and to the value of $20 million. Not significant in maybe your terms, but in our terms it is significant. Yeah, so these are some of the things that we've put in place. Some stick, some carrot.
Yeah. Just out of curiosity, though, I mean, there's so much focus on data and data collection. Do you have a plan then to sort of monitor these efforts to see what they have produced so that you can come back in a year or two, say, here are the hard statistics about how much has been lent, how this has improved, in order to be able to ascertain how successful these policies might be?
We're working on that. Our National Financial Inclusion Task Force has a data working group.
Right.
And part of the work of that group will be to assess. Okay. Again, it's new. These things are just starting to move, and as the data comes in, we'll be able to assess and see where to go from there.
In a few minutes, I want to give the audience an opportunity to weigh in here on anything they might have heard or any questions they might have. Does anyone have any questions for the panel?
Yeah, I haven't.
I see a hand here.
Thank you so much for the conversation we've had so far. One of the last statements the governor of Fiji did make was that one of the approaches that he's using is to get banks to lend 4% of their credit exposure to the economy to agriculture. I just wanted to find out how has that fared and how has banks taken it, and are there sanctions for banks that refuse to comply, and how has it worked as a policy in his bank?
Straight away? Okay. Yeah, thank you for the question. When we put this 4% credit ratio in place, lending to agriculture by banks was as low as 1% of their deposit base. And it had previously been in the 1980s, 1990s, around 10%. So there's a serious depletion of lending to agriculture. It is a stick approach, and the requirement we put in place was that they were to do this within the space of 1 year. So we gave them that leeway to bring up the individual ratios. Currently, the ratio is around 5.2%, the combined ratio of all banks. Some of the banks are not quite meeting that ratio yet. We've allowed them a bit more time. We haven't sanctioned any bank as yet. Hope that answers the question.
But do you give them another incentive, or is it just sort of, it's only a stick? There's no carrot involved?
No carrot involved.
Okay.
No. But the main thing is, what we're trying to do is, I mean, we had ratios in excess of 10% before. Right. The idea is to maybe try to get them to see that lending to agriculture can be successful, and if they do lend and then they're not having anything going bad, maybe they will continue to look at that area.
And just to be clear, though, I mean, this is going to be more of a development food security analysis rather than poverty alleviation, because there's no requirement that they target any particular level within the agricultural economy, right? So they could be hitting the higher end.
It can be the big
players.
Farmers. It can be the small farmers. But one thing that maybe we are looking at is the possibility of a partnership between a microfinance institution, which is working well in Fiji and targets women in the rural areas, and getting repayment rates of around 96%. Successful microfinance institution, our only successful one. And if a bank can finance that, not having to go into the nitty-gritty of assessment of the farmers and that, let the microfinance institution do it, but also, maybe they can use that as part of their ratio requirement.
Does anyone else have any experience with this question of mandatory lending and percentages and how that's worked in their countries that they want to share? No? Okay.
Okay, you want to do it? Yeah, we had it sometimes in the 80s in Nigeria. But we realized that even where we had penalties for the banks, because they were supposed to lend a percentage of their credit to agriculture, and we realized that a good number of them, despite the fact that we had penalties, they were prepared to pay the penalties rather than lend to agriculture. So we realized that that's not the solution.
Yeah.
Rather, you have to create an enabling environment that will make banks to begin to understand why they should lend to agriculture.
Or raise the penalties.
Yes, because they have to see business cases in agriculture for them to lend to agriculture. Yes. So what we did was to create some kind of incentives. One, some of the programs that we put in place, what we needed to do was to put up, we have agricultural insurance in the country to make sure that when farmers take and there are risks, because of the risk involved in agriculture, particularly in the area of primary production, they will be able to be plowed back into the business when there are risks. Furthermore, we looked at the technical component. We're looking at it from both sides, the demand and the supply side. Training the farmers, helping extension agents, government extension agents, providing resources that trains them, train the farmers on business models, on how they can, even smallholder farmers, how they can do manage their finances and all that. Also, ability to accept new technology, particularly improve seedlings and all that. Then on the part of the bank, we started training them on how to manage credit issues, begin to understand the analysis they need to do to understand the profitability of agricultural businesses and all that, and so that they begin to see the need for that. So we did all that. Then for the farmers too, because we know that in our country, interest rate is relatively high. Most farmers, if they take, the ability to pay back at the interest level was very, very difficult, which means farming becomes very, very unprofitable for them. What central bank did was to set up what we call interest drawback, because we tried it earlier on where we gave a subsidized interest rate from the beginning. When you're taking the loan, you get it at an interest rate that is below the market determined rate. We discovered that most people who were no farmers and had friends in the bank took advantage of that. So they pick the money and they don't pay back, because we call them portfolio farmers. So what we did was to institute another program we call interest drawback. If a farmer takes the facility and he pays back as at when due, he gets a percentage, a 40% interest rebate on all the interest elements he pays, which brings the interest rate down to single-digit level. That makes it comfortable for them. So those were the kind of incentive we put in place. For the bank, we instituted rating issues where banks are rated based on their performance in agriculture. The central bank is able to provide an incentive, give them an opportunity of having from some of the programs we put in place, take advantage of it. And those were the things we really did.
But again, this sounds very interesting. I mean, first of all, huge capacity required from the central bank. I'm guessing that was a huge investment. Have you done sort of tracking to see exactly what the impact of these policies has been? Has this been written up in a report, or do you have some hard statistics about the impact of these policies?
Of course, we have done that. There was one particular one we've done. We've been able to improve. Particularly when we talk about financial inclusion, poverty alleviation, we've been able to see the level of employment, we've been able to see increased employment, capacity of most of the smallholder farmers and even the farmers, because sometimes we want a situation where contract growers also get smallholders involved. We've been able to see in terms of capacity utilization of installed capacity and all that. So we've done some work on it, and that's why we have stuck to that approach.
Thank you. Yeah.
First of all, actually, the area of financing agriculture and SME you should consider is a kind of socially responsible area of financing, because there are some element of market failure. That's why private market is not there. And if there is market, it's going to it's reducing every day. And what we are doing in Bangladesh for stick and carrot process, we actually fixed the certain portion of their total advances, like 2.5%, you have to be minimum 2.5% of total credit has to be in the agriculture. And by doing this, actually we surpasses the target. Last year we have actually 104% of total target we have achieved. And if anybody failed to do 2.5%, what we do, we take that money out of that bank, keep it with us, and without interest, and they feel it kind of stick things. And carrot is, we put top 10 bank to lending to the agriculture sector, and we also give them letter of appreciation from those who are doing good. And this kind of thing going on. And another thing, I'm not sure about the Bhutan Monetary Authority Deputy Governor. There is a conflict of interest of the happiness, because banks want high interest with high profitable areas. And the agriculture actually is definitely not high interest and high profitable area. So farmer wants maybe low interest and high flexibility. So how do you match the happiness things between the farmers and banks? I see the conflict of interest there. Okay, thank you.
Thank you for your question. I didn't go into detail how the policy draws the middle path between happiness and profitability as far as financing to agriculture is concerned. I was talking mostly on the role of the central bank in terms of coming up with a very holistic regulatory framework. So getting into your question, I would like to give a few positive contributions that has been made by the Government Agriculture Bank in Bhutan, which is called the Bhutan Development Bank Limited. This particular bank was set up in 1988, and basically this is the main bank which provides credit to the agriculture sector. And how does it manage to balance happiness versus profitability? As has been mentioned by most of the speakers here, when it comes to government-owned bank, I think profitability is not the very important thing. What is more important is how to get access to finance. And that's exactly what is being done by this particular bank. And this bank is provided with a lot of subsidy from the government and also other international organizations in terms of setting up a cooperative development fund. In Bhutan, I would say SME agriculture is mostly cooperatives. Now there are a lot of cooperatives there. So this particular bank is provided with a development fund. Secondly, very recently, this bank has tied up with the community centers in Bhutan. Community centers are established in almost all the small administrative unit in the which comprises of 3 or 4 villages. So there are this community center where people can go and have access to any kind of services free of cost. So this particular bank has tied up with the community center, and which they intend to provide. Also in terms of interest rates, although there is no direct incentive in terms of interest rate, but there are other incentives that will enable this particular bank to improve the lives of the agricultural people who are dependent on agriculture and agriculture SMEs, not necessarily through profitability. I would also like to add that from the central bank's perspective, we have been very privileged actually to be the last one in the region maybe to work on this particular policies. But the privilege has been that we have been able to understand the problems that has been experienced by other countries. So I would just like to mention that from the central bank, what we have made it very clear is that we thought it is not only good to provide the infrastructure, that is establishing a central registry, credit information bureau. This is going to facilitate the banks to provide. But then we also thought it is very important to inculcate financial discipline in the people who are going to receive it. We have seen many farmers committing suicide around the world. So this is what we wanted to do, and as a result, not only that, we also thought that the farmers should know what is their right, how are they protected, and what are the services available. What does it mean to have a very low interest rate or a very sweet-talking agent coming to you and saying these are available. So as a result, what we have done is we have done a mass financial literacy program. We initially did it through PowerPoint presentation, but then when we got the feedback from the people saying that, oh, some banks are just trying to advertise their products. So what we did, we have come up with 7 different products targeting different walks of people from life, from the television series to songs for the very young ones, to movies and all this. We have come up with all this. So this is the few contribution that I would like to share with the colleagues out here. Thank you.
Thank you. I know we are running over time, so I thank you very much for staying with us a bit over the allotted time. This has been very helpful and instructive for me, and I think one of the key takeaways for me is that it really depends on what sort of the government goal is. Are we talking about food security? Are we talking about poverty alleviation, financial inclusion? Are we talking about general development goals? All of those can lead to very different policies. And I think our Nigerian colleague really sort of summed things up when we realized that there's a number of different approaches that have to be taken simultaneously. Everything from financial literacy to agricultural literacy, even for the farmers themselves as well as for the bankers. And everything sort of ties in together in terms of policy and the business model, which is why this has been such an important conversation to have, and I'm sure we will continue to have it in future years. So join me in thanking our panelists today, and thank you for making the time.